If you've been watching the digital asset markets over the last few months, you might have noticed something unusual, something that has the potential to reshape the relationship between mainstream leadership and the world of modern finance. A very well-known public figure, who was once openly doubtful about digital currencies, has recently made a major shift in attitude. This person previously described crypto as something with very little substance, but today, the tone has changed dramatically. And whether you're a casual investor or someone managing a serious portfolio, this shift could have real consequences for how you position your finances moving forward. So in this video, we're breaking down what this new pro-crypto direction actually means, why it's happening now, and how it may impact your investment strategy in the years ahead. Make sure to stay until the end, because we're also going to look at what smart investors are watching next and how you can stay ahead of important changes before they reshape the landscape. Let's start with the biggest question. Why did this high-profile figure change their mind on digital currencies? The truth is, this shift didn't happen overnight. Over the past year, adoption of digital assets has surged across institutions, businesses, and even traditional financial systems. The introduction of large-scale digital asset investment products opened the door for massive institutional participation, and for the first time, crypto is being viewed not as a speculative tool, but as a potential building block for future financial infrastructure. The growing momentum is impossible to ignore, and aligning with it has become a strategic move for many influential voices. But there's also a broader trend happening. Public interest in digital assets has expanded far beyond early adopters. Millions of people, especially younger generations, see digital currency as a long-term store of value, a hedge against inflation, and an alternative path within a changing financial world. Supporting digital assets publicly taps into a group of people who are economically stressed but technologically hopeful. So this isn't just a personal shift. It's a strategic adaptation to where future finance is heading. And here's the part investors should pay close attention to. This shift in attitude could influence discussions around regulations, innovation, and how digital assets integrate into mainstream finance. If future policies become more open, innovation could accelerate, investor confidence could rise, and digital asset markets could grow at a faster pace. Even small changes in tone from influential individuals can create ripple effects across the entire financial ecosystem. But let's zoom in on what matters for everyday investors. This shift comes at a time when digital assets are increasingly being discussed as part of a larger global financial conversation. Companies are adding digital assets to their balance sheets. Institutions are setting aside small allocations, and governments around the world are exploring digital currency frameworks. Any supportive signals from key influencers can increase liquidity and invite more serious capital into the space. For individual investors, this means two things. First, short-term volatility is guaranteed. Markets react quickly to statements, headlines, and speculation. So if you're holding digital assets, expect market swings driven by public commentary and sudden news cycles. Second, the long-term trend could become more stable. If discussions lead to clearer guidelines and a more structured environment, the uncertainty that has surrounded digital assets for years may begin to fade. And historically, clearer rules have always supported stronger long-term growth. Of course, this doesn't mean anyone should blindly jump into digital assets just because a well-known figure has shown support. Smart investing still requires diversification, careful risk management, and realistic expectations. But this shift highlights something important. Digital assets are no longer a fringe topic. They've become part of mainstream financial conversations. Conversations involving inflation, global competition, technological advancement, and long-term wealth preservation. So what should you do now? Keep an eye on changes in policy discussions, taxation rules, innovation incentives, and institutional activity. Watch how markets respond to updates and pay attention to how global financial trends shape the conversation. And most importantly, understand your personal risk tolerance before adjusting your strategy. Digital assets hold potential, but they remain a volatile and fast-moving space. At the end of the day, this new pro-crypto stance from such a prominent public figure signals something bigger than one person's opinion. It shows that digital assets have reached a level of influence that can no longer be ignored. Whether leadership changes or stays the same, the direction of the conversation has shifted permanently. And for investors, this is a reminder that the connection between public influence and financial markets is becoming more important than ever. If you found this breakdown helpful, make sure to like the video so more people can understand what's happening behind the scenes. And if you want weekly insights on digital asset trends, market updates, and portfolio strategy, don't forget to subscribe. Your future self may thank you for staying informed. Thanks for watching, and I'll see you in the next video.